During the 1980s, the then Chinese leader Deng Xiaoping opened Chinese economy for privatization and allowed foreign investment to flow into the country. This was seen as a radical shift from the closed economy model that China had followed between 1949 to 1980s. Between 1949 to early 1980s, China followed a communist policy for economic growth and development. Though people were encouraged to set up industry and businesses, there were several restrictions that didn't allow the private sector to flourish. At the same time, most sectors of the economy were run by companies owned by the Chinese government, and these companies were famously called state-owned enterprises. Up to 1980s, China continued communist policies for economics, and then came a radical shift to capitalism. Ever since then, the Chinese economy has grown in double digits for about 2 decades. This impressive growth rate has helped China to eliminate poverty and emerge as the fastest growing major economy in the whole world. However, recently, news reports have indicated that the Chinese economy is facing a slowdown, and it has already slipped below double digits and is now growing between 6 to 7% annually. In the third quarter of 2019, official data released by China show that the economy grew by only 6%. This is the lowest growth rate China has seen in the last 27 years. So what is causing this loss? In any economy, the 3 key drivers of economic growth rate are investment, consumer spending, and trade. And in China, all the 3 key drivers of growth are seeing a slowdown. Latest data has indicated that investments by rural households increased by just 5.4%, which is 0.1% less than what was in the previous year. Also, the US-China trade war has begun to take its toll on the Chinese economy. The US has slapped tariffs on Chinese goods, which is making Chinese goods uncompetitive in the US markets. USA is China's largest export market, accounting for nearly a fifth of its total exports each year. Besides this, the US has banned several Chinese tech firms from selling their services in the USA, such as Huawei. USA says that Chinese tech firms are a threat to global peace and stability, as they could be spying on the user's personal data and sharing it with Chinese government. Also, US has consistently accused China of manipulating its currency to gain competitive advantage. China has also been accused of stealing intellectual property of US high-tech firms and then making exact replicas. These allegations have been proven right at different points of time, and these wrongdoings by China has worsened the trade war with the US. As a result of the trade war, many Chinese businesses are now sitting on unsold stock and piling up inventories. This is altogether creating anxiety in the Chinese businesses and causing lesser investment to flow into the economy. Only time will tell if China is able to strike a favorable trade deal with the US and bring an end to the ongoing economic crisis. Thank you. See you again.